Welcome to Opening Bid. I'm Yahoo Finance Executive Editor Brian Sazi. Be sure to share your thoughts in our comment sections, like Opening Bid on YouTube, and hit us with those 5 stars on Spotify and Apple Music. We appreciate your love. Bitcoin has been on a tear this year, especially since the election of Donald Trump. But is this a temporary thrill for investors or a long-term play? To help you make a decision for your portfolio, we're bringing you a special crypto roundup with insights from analysts and finance industry folks to make sense of what's next for the crypto space. First up, our chat with Benchmark's Mark Palmer. He's an OG in digital assets, essentially one of the first analysts on the street to cover crypto. He joined us after the election and provided some perspective on what we can expect under President-elect Trump's pro-crypto administration. Check it out. Everything post-election, the crypto universe has gone through the roof. Bitcoin, all sorts of assets. Help us understand what is happening, and can this momentum continue, and why, or why not?
Yes. Well, I think the pieces that were necessary to see a significant rally like this were in place even before the big catalyst that we all know about, which is the election on November 5th, where we have President Trump and for that matter, Vice President Vance, who are both very much supportive of crypto. We are hearing about various appointments in the cabinet who would be supportive of crypto. It's really a sea change relative to what had been before when, frankly, the SEC and other government agencies were hostile to the crypto space. But as I said, the pieces were really in place before, particularly if you look at Bitcoin. Back on April 20th, we saw the 4th Bitcoin halving. And for those who don't know what this means, every 4 years, according to the Bitcoin blockchain protocol, we see the rewards that are paid out to Bitcoin miners cut in half. And this is part of the design of Bitcoin, which makes it counter inflation, which that's very important because those who are big advocates of Bitcoin point to it as the antithesis of what we see with the Federal Reserve and other government central banks printing money as a means of addressing their needs. Bitcoin, of course, will only have 21 million tokens ever created or mined, which would the final one would be mined in the year 2140. Mm-hmm.
Hopefully, I'll still be alive. You too.
Well, hopefully, my great-great-grandkids will be holding onto their Bitcoin at that point.
What is your, everything we've heard so far, President-elect Trump will be friendly to the crypto community. Not a lot of specifics yet. What's your wish list for the Trump administration? What do you think they're going to do, bullet by bullet, to make this a friendlier environment for crypto investors?
Well, first and foremost, it's just get out of the way. Because what we have seen is that the SEC under Gary Gensler as commissioner has used what's known as regulation by enforcement, which is a way of saying that they really didn't have a framework through which they were regulating the space. They just found individual companies that, in their view, were not on the right path, which is the term that Gary Gensler loved to use, and would come after them with cease and desist orders and other means of slowing or shutting them down. This has been a big problem from the standpoint of institutional adoption, because if you're an institutional investor, the last thing you want to do is get involved in an emerging asset class and suddenly have a federal regulator come in and shut down your project.
That's the last thing you need, right?
Exactly. So you're focusing on all of that upside, and the SEC comes in and takes out your knees. That should not be an issue anymore. Of course, we do expect that the SEC is going to continue to police bad actors in the space, but it could be argued that the current SEC, the one that is about to change, has been going after all actors as opposed to just the bad ones.
There's been some chatter on the Trump administration potentially creating its own agency for crypto. Have you heard that, and what does that even look like?
Yeah, it's a bit amorphous, but what we're talking about is a crypto czar. Someone who would effectively oversee all of the crypto impacted initiatives across the executive branch. It's not yet clear exactly what that role could entail, but just the fact that there would even be someone who would be focused on making the United States a leader in crypto, in Bitcoin mining, and other areas that President Trump has talked about, is again, it's a sea change. And we are hearing about different provisions that could be put in place. The potential to have the capital gains taxes on crypto investments cut to zero. Of course, there is from Senator Loomis of Wyoming a proposal in place to create a Bitcoin reserve.
Well, does the country need a reserve? So I grew up seeing, all right, there's gold is in Fort Knox somewhere, and we need gold, but does the country need a reserve of Bitcoin?
Well, I think this speaks to the concerns about the Federal Reserve continuing to print money, debasing the dollar, and ultimately contributing to inflation, ironically, since one of the mandates of the Fed is to control for inflation. But the thinking is that if the US government is holding a significant amount of Bitcoin, that would effectively be a hedge against those inflationary pressures.
Given the finite supply of Bitcoin, like you mentioned, if we create this reserve, and where does the price of Bitcoin go? I think Saylor was calling for $13 million. You sit here today and it's having trouble breaking through 100,000. Like, there's a big gap between 100,000 and 13 million.
Right. We are looking a little bit more near term and just trying to understand the supply and demand dynamics as it pertains to Bitcoin. Of course, the supply of Bitcoin is capped. The fourth halving that occurred back in April is contributing to a slowdown in the new supply of Bitcoins. And as a consequence of that, it's really about what is the demand part of the equation going to look like. The fact that we are seeing increased institutional adoption of Bitcoin is the key here. Bitcoin is that odd asset class where retail investors really led the way in terms of early adoption. And institutional investors, while they've expressed interest, we saw a Fidelity Digital Assets survey showing that over 65% of institutional investors were interested in crypto, thought that at some point they might invest in it, but again, there were things that were holding them back, including an uncertain regulatory environment. And so as we see institutions follow the lead of BlackRock and others in the space, especially given the fact that at the beginning of the year, we saw the SEC approve the first spot Bitcoin ETFs, and now they're proliferating.
Now you mentioned pension. You mentioned to me off camera, pension funds are getting involved too, right?
They are. The state pension funds of Michigan and Wisconsin have begun to buy spot Bitcoin ETFs. Even the city of Jersey City, New Jersey, has done so as well. The reality is
those Jersey roads. Come on, they can use some gains from Bitcoin. I mean, those roads are terrible.
Yeah, well, whatever gets you there, right?
Right.
If 10 years from now we're driving through New Jersey and they're the best roads in the country, well, that might have been the genesis
Thank you,
of
Bitcoin.
Exactly. But the reality is that you've got a lot of underfunded pensions. Bitcoin is a non-correlated asset with a lot of potential upside. So adding a portion of the portfolio in terms of in the form of Bitcoin makes sense. And just as you see these same pension funds adding gold ETFs in the beginning part of the 21st century, I think that's probably the best analogy, simply because what started off as very small became huge with GLD and the other gold ETFs, really becoming mainstream over time. If that continues and we continue to see institutions finding ways that they can fit Bitcoin and crypto into their portfolios, well, that's going to significantly increase the demand for Bitcoin, and that's how you get to a significantly higher price. We assume in our analysis of MicroStrategy, for example, that the price of Bitcoin will reach $225,000 by the end of 2026.
Wow, I mean, 2026 is not that far away.
Correct. One of the things that gives us some confidence is the fact that history is our guide. After the first three Bitcoin halvings, that again, these occur every 4 years. So we had one in 2012, we had another in 2016, another in 2020. During the 14 to 18 months following the halving, we saw a significant uplift in the price of Bitcoin, which again really reflects the change in the supply-demand dynamics for Bitcoin. What could be different this time is that you could see institutional adoption of crypto really accelerate that trend.
Well, and that 225, what is it, probably conservative?
It could well be at the end of the day. What it really comes down to is to what extent do institutions get involved, and to what extent does this newly positive backdrop for Bitcoin and crypto translate into upside.
Near and dear to my heart, Mark, is I always want to make sure the retail investor is protected. They hear both sides of every story. And I think, just judging the activity on Yahoo Finance, like it feels, or I can see the retail investor coming in here and really getting back involved again with crypto. Like, what could go wrong? Mm-hmm. And what are some of your concerns about this latest crypto movement?
Well, the reality is that Bitcoin is, by its very nature, volatile. And while we expect that the volatility of Bitcoin is likely to lessen over time, especially as we see more institutional investors come in, passive investors who are more buy and hold in their orientation rather than traders, that volatility should decline, but it's still very much with us. And the reality is that Bitcoin is also a risk asset, and as such, it behaves as a risk asset when there are when there's significant stress in the market. Example, you go back to the second week of March in 2020 when it became apparent that the COVID-19 pandemic was going to be a major world-changing event. The price of Bitcoin plunged. At that point, it was not about Bitcoin as a store of value or as a hedge against inflation or any of these other factors. It was simply, this is a risk asset. Risk assets are falling. Bitcoin is falling with them.
After the break, big names in finance hit on all things crypto. Stay with us. Welcome back to Opening Bid. We're looking at how financial institutions are handling digital currencies differently. First, PayPal CEO Alex Chriss joined us for his one-year anniversary at the helm of the company. We talked about many things, but we were especially intrigued to get his take on crypto adoption at a financial giant like PayPal. Take a listen. Now, I look at the competition, I call it brutal, or am I just overhyping? I mean, this is like, some of these competitors of yours are moving, who weren't even around 5 or 10 years ago, are moving really fast.
Yeah, I mean, to me, this is what makes it so fun. I mean, we are in an incredibly competitive, dynamic environment. It changes every day. And what really you have to focus on is, where do you build competitive differentiation and competitive moats? And for us, this is where I've really tried to focus on, how do we bring that consumer ecosystem and merchant ecosystem to bear? And we've got lots of competitors that focus on consumers, lots of competitors that focus on merchants, but very few, if any, that can actually bring the two together. And so again, we're being hyper-focused on where we're going to win. And you've seen that in some of our partnerships. I think there are a lot of partnerships we've announced, even in the last 60 days, that have really surprised a lot of people. And they've thought, hey, wait, I thought that was a direct competitor of yours. Wait a second, how come you're doing a partnership with them? And I think I want people to take a step back and say, we're actually playing a bigger game. We're playing a game where it's all about commerce. It's all about building platforms at scale. And it's about leveraging the competitive advantages we have as an organization. And sometimes that means bringing your competition in closer and making sure that they're a part of the journey with you.
I've always thought, I probably have covered PayPal and off and on for maybe a little over 10 years, Alex, and I've always thought Venmo was this underappreciated asset inside the company. I don't think my views are alone, especially on the street. How will that evolve under your leadership?
Yeah, your views are not alone. I share them. It is one of the most exciting assets that we have. What a privilege to be able to run a business that has so much penetration into one of the most valuable demographics in the US, right? affluent, young demographic where money is flowing in, billions of dollars every month flowing into the Venmo ecosystem. We've just not executed a very good monetization plan. And this is not rocket science. Step one is just ensuring that all that money that's flowing in because somebody gave you a payment for the pizza that you shared around the table, you can actually now take that money and pay it out. So that could be tap to pay and be able to pay for that pizza in the store. It could be ensuring that there's pay with Venmo. This is about getting debit card penetration up and running. So we've made a bunch of innovation and a bunch of progress on that, even in the last couple of quarters, seeing debit card penetration increasing significantly, seeing pay with Venmo access increasing significantly. That's a first step, a first chapter. If I then look into the future of Venmo, one of the most, I think, underappreciated things about the Venmo asset is that the relationship between consumers and merchants is something that I've been fighting and looking for 20 years in my career, which is this connection between service-based businesses and consumers. And service-based businesses are exactly what it sounds like. It's the people that are walking your dog, washing your car, cutting your hair. These are people providing services. And the way that they pay right now, oftentimes is through an invoice, it's through cash, it's through old school mechanisms. Venmo is the way they want to get paid now. And our ability to not only make that transaction happen, but now start to build services around those businesses, enabling them to create appointments, create scheduling, create CRM. All of those are services that these small solopreneur, micro business, service-based businesses need to be able to run and thrive. That's a big opportunity for us and a big monetization going forward.
I'm really hearing a different vision. A couple of years from now, PayPal is just going to be a very different company. I mean, should it be regulated differently, Alex? I mean, is just given the amount of money you're taking in, you might take in years down the line, is PayPal a bank?
Yeah, well, I think we're pretty heavily regulated right now, operating around the world. So, we don't have aspirations to be a bank. It's not something that we're focused on. We're focused on the innovation and the way that we can enable commerce between consumers. We've got lots of bank partners that I think are regulated fairly in the way they are, and we obviously have a huge amount of regulation across where we are now. I wouldn't change where we're going because it allows us to execute innovation with velocity.
How far down the rabbit hole do you want to go with crypto? I mean, do you see PayPal going toe to toe with a Coinbase and some of the I would even say a Robinhood?
Crypto to me is a really important future element of commerce, but it's a how, right? Really what it is enabling commerce at faster speeds, high scale, globally, and at lower costs. And anytime that you can move money faster at lower cost, that's better for consumers. And so we've taken the right steps in. We, again, are doing it in the right way to be regulated so that we can move money safely and securely for our consumers and make sure that their money's protected. But I think, again, we're just scratching the surface and really making it available from a payments perspective on a global scale to allow people to be able to transact anywhere in the world and do it fast, securely, and at low cost.
So it doesn't sound like you see PayPal morphing into some form of exchange where, hey, if I want to trade Bitcoin, I use PayPal?
I think we could dabble in that. I don't think that's the big long-term win for us. I think for us, the real transformation is, where am I in the world where I can create the right payment to any merchant anywhere else in the world, connect the dots between consumers and merchants, and do it at much faster speeds, very securely, and at lower cost for consumers. Consumers right now are paying a ton in fees anytime they want to purchase cross-border, anytime they want to purchase from a merchant around the world. With inflation working in different ways in different geographies, it's just hard to manage money as a merchant and understand what you're paying for as a consumer. I think we have an opportunity to really play a hand in that.
Next up to close us out, BNY Mellon CEO and President Robin Vince. BNY is one of the oldest banks in America and in the world. So how are they handling modern digital assets? Find out now. As a company that's so intertwined in our financial system, do you see crypto at some point rivaling traditional currencies?
I think digital assets, I'm going to take one click out and just say digital assets, whether it's the technology, blockchain distributed ledger, whether it's the ability to take certain assets and represent them on those types of ledgers as a digital asset. I think there's a lot of opportunity that comes from that. The choice about whether or not an individual or wants to put all their money in a particular coin is a slightly different thing. I don't think the dollar is going to go anywhere. I think the way that we treat and make the dollar work efficiently and effectively in the world's financial system is going to evolve. But by the way, the traditional dollar can be real-time too. We have new real-time payment rails in the US. We have FedNow. We're very involved in that. We're actually the first bank to go live on those real-time payment rails. And so being able to make dollars work more efficiently isn't just dependent on digital asset technology, but it may have a role to play over time.
In prepping for this, I saw, what was it, earlier this year, you're working with NVIDIA. And anytime I see a company working with NVIDIA, I sprout up because, I mean, this is the company of the moment. I mean, how do you work with a company like that, and how impactful is AI to the insides of your company?
Well, we were the first large bank to install an NVIDIA, what's called a superpod. Essentially, it's one of their sort of stacks, the sort of what they would call a supercomputer inside our firm. And we thought that that was important as part of our AI. We have a mix of both on-premises and leveraging external partners in our AI platform. We've built our own platform that can then leverage all of the external platforms of the world. So we're not trying to reinvent the wheel with large language models. We're happy to use the large language models from OpenAI or Llama or Mistral or the various other ones that are available. But we want to do it on our terms, protecting the data, because at the end of the day, that's what our customers expect from us, that we are secure and that we're making sure that our data and their data never leaves our control. So that's all the way that we've engineered it. But the AI superpod from NVIDIA helped us to be able to really power that platform layer. Now, what's next for AI? I think it's going to be very exciting. I really do believe this is one of those technologies that's going to bring the next generation of being able to bring leverage to humans. You know, we've had physical leverage for a long time, since the beginning of the industrial age and even before. The lever, the wheel, the engine, all of these things that helped to create mechanical leverage for humans. But really now the knowledge level leverage, the intelligence leverage that AI can provide, where we each can have an agent or an assistant, bots that essentially can work on collectively on our customers and our behalves. There's a lot of efficiency that can come from that. We're seeing some of the benefits of that in terms of being able to improve the quality of life of some of our people, make certain tasks a lot easier, make them more efficient, creating new solutions for clients that frankly humans couldn't really provide in the same way before. And so this is going to be a long journey, where this is not a story of 2024 or 2025, but I think we're at the beginning of a pretty interesting period of time.
This is your latest episode of Opening Bid. Once again, be sure to hit us with those likes, follows, and subscribe wherever you get your vodcasts. Happy holidays, everyone.